Welcome to ValueVest Daily. Well, we have a massive, brand new defense tech stock that just hit the public markets, and man, it has made a serious impact on its very first day of trading. I'm talking about HawkEye 360, ticker symbol HAWK. Now, you might be thinking this is just another software company, but it's absolutely not. This is a pure-play, space-based defense technology firm that is quite literally mapping the invisible signals of the entire globe. So is this the next big space play that smart value investors are going to look back on a few years from now and say, wow, I really wish I bought that on day one? Stick with me. In this deep dive explainer, we're going to completely break down the science of what this company actually does, why Wall Street is reacting so strongly to their financials, the exact numbers that matter for your valuation models, and ultimately whether you should be looking closely right now or maybe waiting for a dip.
But real quick, before we look at a single chart or valuation metric, we've got to cover our bases. Please remember that the information presented in this explainer is strictly for educational purposes. This is not financial or tax advice. You know the drill. Always do your own due diligence before making any investment decisions.
Okay, let's dive right into this. Here's the roadmap for today's explainer. Number 1, the Hawk IPO explosion. 2, decoding their tech mode. 3, financials and growth. 4, the bull case logic. And 5, risks and our final verdict.
Section 1, the Hawk IPO explosion. We're looking at pure momentum in defense tech.
The second the opening bell rang, things moved incredibly fast. HawkEye 360 priced its IPO at $26 per share. And keep in mind, that was already at the very top of their expected $24 to $26 range, which instantly shows us there was massive institutional demand right out of the gate. They successfully raised $416 million. But the real story is what happened literally minutes later. The stock debuted and immediately popped roughly 30 to 31%. Shares opened around the $33.50 mark. They hit intraday highs near $34.49, and they closed out the day hovering around $34. I mean, that is just incredible first-day liquidity, and it shows a totally ravenous appetite for defense tech right now.
So what does that crazy price action actually mean for the size of the company itself? Well, it pushed HawkEye 360's market cap to roughly $3.15 billion on day one, with a B. That is pure momentum in action for a pure-play, space-based defense tech company. To put that into perspective, we aren't looking at some tiny, highly speculative microcap here. At over $3 billion, Wall Street is already pricing in significant scale and a very strong belief that this company is positioned to capture a massive slice of global defense spending. But to understand if that $3.15 billion valuation is actually justified, we've got to understand what on earth they actually do up in space.
Which brings us to Section 2, decoding the tech moat, the science of space-based RF.
The entire core of HawkEye 360's business is built on something called RF SIGINT. That stands for Radio Frequency Signals Intelligence. Simply put, this means they are passively detecting, geolocating, and characterizing radio frequency signals all over the globe, multiple times every single day. The absolute best way to visualize this, and I absolutely love this analogy from the source material, is to think of it as Google Maps for invisible radio waves, but specifically built for national security. So instead of taking standard optical pictures like a normal satellite, they are mapping the invisible electronic footprint of the entire planet.
So how do they actually pull this off? Honestly, it's a brilliant piece of engineering. They operate a constellation of over 30 low Earth orbit satellites. But here's the kicker. They don't just fly randomly around the Earth. They fly in highly coordinated smart clusters of 3. By flying in threes, they can use the extremely slight differences in the time a radio signal reaches each individual satellite to passively triangulate the origin of that signal with pinpoint precision. It's like a giant puzzle happening in real time. Imagine this real-world scenario for a second. A ship turns off its automatic identification system, its AIS transponder, specifically because it wants to hide. It becomes what's known as a dark vessel, maybe engaging in illegal fishing, piracy, or even adversarial military movements. While HawkEye satellites, they don't even need that transponder. They simply pick up the ship's standard radar emissions, geolocate it in real time from space, and hand that exact coordinate data straight to the Navy or the Coast Guard. There's nowhere to hide. And they are doing this at a staggering scale. They aren't just dumping raw, messy data onto their clients' desks. They use proprietary artificial intelligence to crunch over 1 billion data points from their massive RF emitter database, instantly turning all that random noise into actionable military intelligence. This tech literally bridges the gap between raw space data and actual on-the-ground global security.
Section 3, Financials and Growth Trajectory. Let's look at the real numbers. Okay, the
The science is undeniably fascinating, but as value investors, we need to know, does the science actually make money? When evaluating if an individual stock is a buy, particularly if you are building out a DCF, a discounted cash flow model, you need predictable cash flows and you need strong growth. This is where we get our golden inputs. Last year, in 2025, their revenue hit $117.7 million. That represents a totally staggering 74% year-over-year growth rate. But here is the absolute game changer that separates HawkEye from pretty much every other space startup out there. They are actually profitable. They swung to a $2.7 million net profit, their first profitable year ever, with an adjusted EBITDA of $24.8 million. That implies really healthy margins of around 21%. Actually, scratch that. If you're plugging numbers into your DCF model, the most important metric might be that bottom one right there, a massive backlog of $303 million. That is locked-in, contracted revenue visibility. Most high-growth tech companies can literally only dream of having a backlog that is nearly 3 times their current annual revenue. It makes forecasting their near-term cash flows incredibly highly predictable for our models.
And guess what? They're about to pour serious fuel on that fire. That $416 million in fresh cash they just raised from the IPO, it isn't just going to sit around collecting dust in a bank account somewhere. It is earmarked specifically for expanding that satellite constellation. More satellites mean much higher revisit rates, which means they can pass over a target area way more frequently and collect faster data. They are also directing a chunk of that cash toward further AI and machine learning upgrades for their analytics platform. It creates this amazing flywheel effect. More satellites yield better data, which trains better AI, which in turn attracts much larger defense contracts.
Section 4. The bull case logic. Here is exactly why Wall Street is so excited.
The macroeconomic tailwinds pushing this company forward are just massive right now. Global defense budgets are exploding amid rising geopolitical tensions all over the world. Nations are realizing they desperately need persistent, reliable intelligence, but the old way of doing things, traditional government-built spy satellites, those take a decade to build and cost billions of dollars. RF SIGINT from space, provided commercially by a company like HawkEye, is cheaper, it's faster, and it allows for unclassified intelligence that the US can easily share with allies, like Japan, for example. Plus, HawkEye 360 is the very first major commercial SIGINT company to go public. They're completely disrupting a market that historically was 100% classified and totally government-run. This gives them an unbelievable first-mover advantage, locking down sticky, high-margin government contracts that result in recurring data sales. And whatever you do, don't overlook that last point. In December 2025, they acquired Innovative Signal Analysis, or ISA. This acquisition is a huge deal because it unlocks classified processing tech. It essentially builds a bridge between the commercial space and the top-secret government realms, fully opening the door for far deeper, highly lucrative top-tier government contracts.
Now we have to talk about valuation because this is where the rubber meets the road. At a $3.15 billion market cap against $117.7 million in revenue, it's trading at roughly 27 times 2025 sales. Yes, at first glance, that looks rich. There's no denying that. But you have to compare it to early-stage space peers like Planet Labs or Spire Global, which are still growing but remain entirely unprofitable. HawkEye is already cash flow positive in the key metrics. If we run the logic for a DCF model here, if HawkEye can successfully scale its revenue between $500 million and $1 billion over the next 4 to 5 years, which honestly is very doable given their $303 million backlog and the constellation expansion, and if they expand their margins to 40% or more as they capture more international and commercial deals, well, that 27x multiple compresses incredibly fast. For patient value investors who truly understand these defense tailwinds, the math here points towards serious 5 to 10x upside over the long term.
Section 5. Risks and final verdict. We got to keep it real.
Because as always, we have to look at both sides of the coin. Make no mistake, operating in space is incredibly hard, and the risks are very real. First and foremost, this is a highly capital-intensive business. Satellite launches are wildly expensive, and if a rocket fails, which does happen, that is a massive financial and operational setback. Secondly, there is some heavy customer concentration going on here. Approximately 61% of their revenue comes straight from the US government. Now, while government contracts are famously sticky, relying that heavily on a single entity is definitely a double-edged sword. If US defense spending shifts or budgets get delayed, HawkEye is going to feel it immediately. There's also serious execution risk. They have to successfully grow this constellation without any major delays to justify that premium valuation. And they aren't entirely alone in this space anymore. Competition does exist from smaller, nimble players like Unseen Labs and potentially Spire as their tech evolves. Finally, because they are priced for perfection right now at 27 times sales, if they miss a single execution target or fumble a quarterly earnings report, you will likely see severe valuation compression and a really big drop in the stock price.
So what does this all mean? Here's the ultimate question for your portfolio. Are you buying Hawk today to ride this insane momentum, or are you waiting for a dip? That incredible first-mover advantage, the massive locked-in backlog, and their newly acquired classified tech via ISA give them some serious breathing room and remarkably wide competitive moat. This is exactly the type of under-the-radar setup that features real tangible tech, explosive growth, and massive national security tailwinds. But given that premium valuation, high volatility is practically guaranteed in the near term.
For patient investors who thoroughly understand the national security thesis and can stomach the wild volatility of a newly public space stock, this is absolutely one to watch closely and potentially build a position in on any pullbacks. And that wraps up our deep dive into the HawkEye 360 IPO. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities. Stay sharp out there, and I will see you in the next explainer.